Welcome to another episode of Catalyzing Radical Systemic Change, where in my own language it's all about discovering, mapping, and cross-pollinating the various building blocks towards a planetary civilization ahead. The topic of today's podcast is decentralized futures, real-world applications of blockchain. So I've consciously waited, I'm like in year 4 of my podcast, to dive into the various rabbit holes of Web3 and blockchain applications. So I'm personally very critical with blockchain, but I don't think it makes sense to pour out the baby with the bathwater. So what we want to discover today are really what's the connective tissue in between that new technology stack, the various, let's say, stages of the development of the tech stack, to then really find out where does this tech stack, or the tech stacks in plural, solve for issues that before would not have been able to solve with other technology. I'm super grateful to be in the room together in this virtual room in between Guatemala and Puerto Rico with Matt McKibbin. I would say Matt is definitely way deeper in the blockchain space than I am. And like always in my podcast, I want to welcome Matt. So thanks for being here. And my first question, like almost always in my podcast, is what are some of the pivotal moments in your biography that link you back to the topic of today's podcast? So curious to listen in. Matt, the floor is yours. And I'm just really curious, what happened in your life that made you to connect and to commit so deeply with a critical eye, but to commit so deeply to blockchain and Web3?
Thank you so much for having me, Alistair. Really appreciate it. Yeah, my story, my background. I've had some really deep moments that have changed the arc of my life. I studied physics in undergrad and graduated in 2008, and you get a good ability. You're not scared of any math, right? You're not really scared of whatever math is going to be to moving forward. And the bailouts happened in 2008. The whole world financial crisis that crashed, and I started looking at what money was. I said, what, they're starting to print trillions of dollars and give it to banks that had irresponsibly done the thing. And I was like, what do you mean you're printing trillions? So I was like, how does money work? And most people can't write the scientific notation down for a trillion, and it's just a number that's just mind-boggling for most people. And so giving that amount of money and giving it to people, I just didn't understand. And so I started to go down the rabbit hole of what is money in society, and where does it come from, and how can you just kind of make it up? And there's a lot of, at the time everything was labeled a conspiracy theory, right? Which is the way that people turn off critical thinking. Oh, it's a conspiracy theory, therefore you can't discuss it or talk about it. I definitely was influenced by, a lot of Austrian economic thinkers versus Keynesian economic thinkers. Ron Paul was a big person in the American political system who was advocating for, sound money and money that wasn't just printed and given to political connections. And so that drove me into understanding what money was and doing a lot of research on different economic philosophies, because I didn't know what the answer was. I just knew that whatever was going on wasn't necessarily didn't seem to sit right. And then in 2012, 2013, I really started. There was the 2012 Ron Paul campaign. There was a lot. I was living in Washington D.C., so there's a lot more people that were willing to discuss and argue about monetary policy and kind of politics there versus in some other places in the world or in the country. And I discovered Bitcoin. And, you always kind of found people that were, somewhat knew a lot of information about different core subjects. So you needed to know something about cryptography and math. You needed to know something about networks and decentralized networks versus centralized networks. You needed to know something about monetary policy and and economics. And so the people that were really into this technology, they had subsets of knowledge around this things that you could have a deep conversation. Whereas most people, you go to your mom and you say, "Mommy, Daddy, where does money come from?" And they say, "It comes from the government, son." And you're like, well, that doesn't answer my question very much. And so, but more meaningfully on December, this is a podcast that you've had a lot of interviews around plant medicine ceremonies and different consciousness explorations in the world. And in December 2012, December 21st, 2012, the end of the Mayan calendar, I got to co-host a podcast with one of my activist friends, and we interviewed the founder of Armory Wallet, which is one of the first like offline storage wallets, and he explained blockchain like we were five, like explained it with no technical terms. And actually that night, I had my first opportunity to explore my consciousness with DMT as well. And so there was like an interweaving of what I felt was like consciousness technologies as well as this blockchain technology. And I really got into the tech evangelism side. I was running the Washington, D.C. Bitcoin meetups, and really just like, it was five guys in a coffee shop at the time. But like, as things grew, it was really meaningful. And then one other really big pivot point was actually my first ayahuasca experience in 2014. I was really angry at the existing systems. I had a lot of anger and angst and energy that I was putting towards kind of complaining about the existing systems of the world. And in that experience, one of the cathartic moments, one of the integration moments was, there's actually a title from a Nako Medicine for the People, but it was "Don't waste your hate, but rather gather and create." And I still kind of get chills when I say that thing, but it was basically saying, hey, don't waste all of your energy arguing and demonizing what you think is bad. Go build something, go build a solution that you think will actually help people. And for me, that was like, I was in the industry, but I was like, confirmation was like, go and build on the technology that you find as the solution. Focus on solutions and not necessarily just the problem.
What I find, let me tie into that, because what I find very interesting is a synchronicity or a coherence in the genesis of how you got connected and how I got connected. So what I find very interesting is it seems you got first connected through a mix of trying to figure out from a macroeconomic point of view, from the 2008 crisis, how is it just possible that, first of all, why do those who caused the crisis get bailed out? Secondly, how is it just like possible to print trillions of dollars? Thirdly, why are those who were not part of the crisis mainly responsible for seemingly at least trying to pay back those trillions of dollars of debt? And maybe fourthly, like, what is actually the deeper history of money? And I find that very interesting because when you look into the blockchain space at large, I see a lot of the people who jumped on the bandwagon like later on and found out they could make a decent amount of money, arbitrage trading, not judging that, but that for whatever reason, many of them, at least I don't think, do the proper homework of trying to figure out what's actually really the revolutionary potential. And I think that will be a tension throughout the podcast. Like, what have been the original promises of blockchain, distributed ledger technology? What are the different stages of maturity of the technology? And where does at least some of these experiments, prototypes, companies, funds try to hold up with the original promise of decentralizing infrastructure? And where are, at least to my humble understanding, where are many of the endeavors already co-opted by, let's say, the system at large. So I think let's take the segue into diving deeper into the nitty-gritty of the various rabbit holes. So I know DecentraNet came a little bit later. So, okay, you're in Washington, D.C. There's few people just becoming aware of that. You're hosting meetup groups. But what was the vision behind later on, like co-founding DecentraNet? And how does that tie into, and I would like you to explain that to the listeners, like the very first genesis of just Bitcoin, and then the second cycle of Ethereum and the ERC20 token, and then like, yeah, kind of the interesting various bubbles that came out of that.
Absolutely, yeah. It's a good story to tell, and there's a lot of people that are kind of telling. So the original vision, Satoshi released the white paper. I think it was January 9th of 2009. And he's in the first block of the Bitcoin blockchain, right, is second banks on the verge of collapse, second bank bailouts to begin, right, which is amazing to put this title, this news headline, into the Bitcoin blockchain. And what is the Bitcoin blockchain in or what is blockchain in explain it like I'm five, or non-technical terms, like I said, the thing. And it's an accounting ledger. It's a worldwide accounting ledger that everyone can write to in an open source and permissionless way, right? But no one can go back and erase. So for the first time in history, we have the ability to come to consensus as humans. We're not trusting someone who keep records for us. But once we put a record into the ledger, it is permanently recorded. And there's a lot of applications that come from that, but that's the fundamental innovation in the Byzantine fault tolerance, the Byzantine generals problem, which is basically like, how do you trust the record keepers? And if you all kind of have a little piece of information, potentially, then you can kind of put it together. But you fundamentally have to keep, there's people are prone to corruption and error. And so people keeping records in a bank or a government or a corporation, those records can be changed, defrauded, and all of that. And so we have a worldwide accounting ledger. We have cryptography, which you can say is magic, right? It's math, right? But the cryptography ensures that no one can go back and change the state of the blockchain. And on that state, the initial application was, hey, we're going to have a number of units of account. Those are Bitcoins. And we're going to have these units of account have a mathematical monetary policy that no humans can go and change, right? Monetary policy in current central banking things, people change it all the time. It's on a whim. There's a lot of criticisms there, but that this will have a mathematically understood monetary policy. And the account that you own, it's not even an account. There is the ability to use cryptographic keys, a public key and a private key. The public key is like your address, and the private key is the ability to sign the address and tell the network that you are the rightful owner of that public address, of those units, and the ability to then say, hey, I'm going to send a unit from one account to another. This is the signature that you need. And the network verifies that through math. No human is verifying that. Network verifies that those two cryptographic keys fit together. And then it decides, then it transfers those units of account from one place to another on this ledger. And there's no humans involved. There's no corporations involved. So that's really one of the main innovations, is taking a worldwide accounting ledger, taking the ability for everyone to have their own ability to control their finances without a third party, and putting that technology into the humans. And it's like a protocol. I use the example of, like, when I'm explaining it to people, TCP/IP. which is our information. In the beginning of the internet, we had information transfer protocols. So we have TCP/IP. Everyone knows their IP address, right? That's your address to get information from one computer to another on a network, right? SMTP is email, right? Matt at DecentraNet.com, and you can then build lots of applications on top of these protocols. But for the most part, we're not configuring our own protocols, right? HTTP is website protocols, and you can build lots of applications. So now we have a worldwide accounting ledger. We have the ability to then create money applications on top of the worldwide accounting ledger. And so it's the internet of money. We have the internet of information. We now have donned these tools that allow us to create an internet of money for the first time. And that's kind of the era of it is, hey, we have these abilities, open source. Anyone can take the code, and if they think they can make better choices with that code, they can take it and they can build their own community around it. So we saw Litecoin, which was Bitcoin forked, open sourced and forked, and then they did a different algorithm for the instead of SHA-256, it was scrypt, I think. And anyway, you could build community around it. You saw Dogecoin, right, which is a very, very popular meme token, but it was basically just a fork of people saying, I'm going to make the token about this cute dog, right?
Then let
And
let
see what
me
good.
let me tie into that. So and let's try to
Yeah.
approximate some timestamps. So we're in the early days. I will ask you like when exactly are we sometimes throughout the podcast. So I think the main counter argument that I get from friends that are not in Web3 that are not invested, they're often saying, well, but what does it change? Like outside, like in the real world. So me as a trained macroeconomist and knowing the deep history of money and how money is issued and let's say the ramifications of fiat-based money that has not a real collateral, but maybe, the petrodollar, is still the world's dominant kind of feature out there. So when I suddenly, and I was well aware of the white paper and then the search of Bitcoin, I'm like, very interesting. It seems it's the dawn of a new era where a cluster of open source technology allows people to build their own code and governance and ethics around how do we actually issue money and how do we build communities around that. So the high level, let's say, memetic information, I totally get. But let's stay with the early days. So there's only Bitcoin. So what can I actually do with that? What were like the use cases in the early days? And what then spurred what you and many others refer to as the Cambrian explosion with like Ethereum and the ERC20 token coming up?
Yeah. So the use case for Bitcoin in the beginning was exactly that: the ability to transfer units of account without a central intermediary and record information on a worldwide accounting ledger, right? So you could take any information that you wanted, hash it to the Bitcoin blockchain, and in 50 years, if you have that same information, you can prove that information is the same as it was at the beginning with the hash of the information. And so that is to preserve historical record, right? You can put something into the Bitcoin blockchain with the hash of it and ensure that it's never been changed. And so that, like, without writing it on a piece of paper or trusting some other intermediary, you've never been able to do that before. And then the Silk Road was one major application of using this type of technology, that people that wanted to operate in gray markets used it on the Tor networks and those types of things, and that was one of the main, I guess, use cases in the beginning. I would also say that the bail-ins in Cyprus during the like ECB kind of like or during like the European kind of banking crisis in the early teens sparked a lot of people to take a look at not keeping their money in a bank. How do I do money without doing cash or doing hard, coins, or, what are the other options? And since Bitcoin existed, it was like, okay, well, if I have my money in Bitcoin, then, the bank can't take my money because there's a bail-in going on. And that definitely was one of the applications. And so 2013 was one of those like bull run years. And Bitcoin went from, $8 at the beginning of the year, I believe, till like 1,000 at the end of the year, something like that. And it didn't stay that high for very long. There was very limited exchanges that operated. There was Coinbase. I think Kraken was soon to be operating there. And then there was the Mt. Gox. And so Mt. Gox was kind of one of the failures that happened in 2014 that brought the price down. And it was like, one of the exchanges that was not operating in an honorable and integral way, and people lost their money. I lost some money on it as well.
Let me
And
let me translate that
yeah,
for really those new to the field. So I'm Alistair
sure.
in 2024, and I have some surplus money on the bank account. So I can put it into stocks, I can put it into bonds, I can buy US treasuries or other treasuries. But Alistair is saying, wait, wait, wait. I don't really trust the petrodollar, right? We suddenly have, the BRICS countries, so it seems like the system is crumbling down. So I'd rather take a bet that every month I could put some of my money, couple of hundred, couple of $1,000 into Bitcoin. Because with all the ups and downs over the last decade, it feels like it's becoming a kind of stable reserve currency. That's one thing, right? And I think like many listeners may get that, and either they have already some Bitcoin in their portfolio or they can do it. So it's not that complicated to set up. And especially in 2024, there's a lot of, let's say, payment apps, right, that perfectly tie back into your like normal fiat-based currency, where you can also get a kickback in different crypto coins. So I get that. The other thing is, besides Alistair wanting to buy in the gray, I would rather say in the black market, some things that other regulations don't allow me to buy. So let's say drugs or psychedelics, right? Which is still possible. What are other applications besides Bitcoin being a reserve currency, and in between then other coins to do arbitrage trading? And if you want to do that, which is kind of time intensive ish, I would say. So I don't do that. So I mainly have some things in my portfolio in Bitcoin and other tokens, but more like as a long-term bet. What are other real world applications that people can do with Bitcoin only? Because then I want to segue into what is the real innovation of Ethereum and the ERC20 token, and what's kind of the second big life cycle of crypto and Web3.
Sure. With the Bitcoin protocol, for the most part, I mean, 2024, there are new things being built. 10 years ago, there was just the Bitcoin protocol. It was very new. Right now, lots of types of decentralized applications and like kind of layer 2 things are being built on top of Bitcoin to replicate some of the other innovations that have been done on other networks. Um, uh, but Bitcoin, for the most part, the base layer is hard amount of limited supply, like digital scarcity, the ability for no one in the world to be able to make more of what this digital asset, the ability to permissionlessly and open sourcely transfer it to other people, and obviously what very widespread institutional adoption at this point, banks and governments and things. But the layer 2s, they're starting to do decentralized finance, and they're starting to do there's just a lot of like infrastructure that might be able to be built on top of the Bitcoin blockchain because it's the most liquid. So there's almost 2 trillion, 1 point something trillion dollars of an asset. And so liquidity is something that is it took a long time, but is there for people to be able to operate on a financial application. And so like we'll go into the building the Lego blocks or the DeFi, the Ethereum stuff here in a moment, but you'll be able to do a lot of the same things building financial applications as you were previously only done on other innovations.
Yeah, what I find interesting is, first of all, your genesis and the critical understanding of the let's say space at large. But since you're also an investor, you have companies, you invest into companies, is like I'm really curious, what did happen inside of you when Ethereum happened? What were like your hopes and the promises of the Cambrian explosion? And what did create then the hype cycle and also the problems attached to it? Because like always, like in capitalism, it seems at large, like we have all these hype cycles and then markets collapse and, um, nivellate again on a different level. So what happened when Ethereum started and what got you excited and what was this like second big, like long bull run and what made it crush?
Yeah. So Ethereum was, a white paper that was Vitalik Buterin was going to different Bitcoin conferences in end of 2013, 2014. They ended up doing a token sale in out of Switzerland. And the main premise of Ethereum was really easy. What smart contracts basically is the concept. And so with Bitcoin, you have a digital asset send to one person, but you can't really do any sort of like business logic. And so what do I mean by business logic here? A smart contract is like a vending machine. A vending machine has software on it. You put your dollar into the vending machine, you hit B2, you hope that a Snickers bar comes out of the thing, but you can't see the code. You have no idea if that Snickers bar is actually going to operate and what's going to happen there. The smart contracts allow for you to do these types of contracts in a completely open source, visible way for everyone to understand exactly what the business logic is. So like a vending machine with an open source smart contract, you could be able to review the code and say, hey, I know I'm going to get the Snickers bar, assuming everything operates. And so if you think about the levels of complex business logic that people can create on top of programmability of a money layer, right? I can do business with lots of people around the world without having to trust a central intermediary to be the one, an escrow service, for example, or to be able to do interactions. Now, assuming you can review the code and it's secure and there's not like some secret, flaw or whatever, which is why we have a lot of professionals that do codes. And so that's the promise of Ethereum was programmability on top of these monetary layer. And one of those pieces of programmability was to issue your own token for whatever purpose you would like to issue it. A fungible token. So fungibility is actually something that's really, I don't, to like define fungibility, but most people don't use that word. But fungible, it just means that like one of that version of is the same as one another is the same as one another. So if I have 1 ounce of gold, it's the same as some other ounce of gold. If I have $1, it's the same as $1. One Bitcoin is the same as any other Bitcoin for the most part. There's like some rare use cases where there people are saying, hey, well, this is a collector's edition of a piece of a Bitcoin, and therefore it's semi fungible. But those are edge cases for the most part. And so ERC20, the Ethereum request for comment 20, allowed for this Cambrian explosion for anyone to deploy the same type of token with this number of supply, with the rules around it, very, very, very easily. And as well as the exchanges could list any of the ERC20 tokens as easily as any other one. And so in 2017, had the first couple token sales in 2016 on Ethereum. In 2017, we saw this massive run up in Ethereum with this use case of like 8, and then they're like, 8 to 1,000 kind of thing, where people were taking they're launching a token. They were putting up an address and saying, hey, we're going to send you this token to fund our project. Basically, like, buy this token. It's going to leverage, the original use case for these things was like, you're pre-purchasing access to an open source software system, and the token allows you to use the system. And if more and more people want to use the system and there's only a limited amount of tokens, the token value may increase. But they weren't allowed to say that at the time, because that's in US things, there's a lot of security stuff. So we had this Cambrian explosion of everyone using this technology to launch their own tokens, raise tens, hundreds of millions of dollars. In the case of EOS, $4 billion in 1 year, right? Of a year-long token sale, and an attempt to build things, but with really no governance. And there was, you mentioned about like capitalism and the thing. So there's a speculative bubble. People see a new technology, they speculate on its potential. They put their money in and say, hey, like, I might make some money. I'm going to fund this thing. It might not work out, but and then when the increase goes really rapid, you see a lot of other types of behaviors that have like people, spending because they view it as play money. Hey, I've made tens of thousands, I've made millions of dollars, and might as well do it. As well as like no governance around the money that you raised. Like in a startup, if a venture capitalist puts a check into your thing, they get a board seat and they have rules and regulations. And so you see this massive speculative bubble, but you also see massive crashes after that, because it is speculation and it's not all going to work out. And that 22-year-old that raised $10 million probably isn't going to allocate it efficiently, right? But you also see things getting built out of that. Small, maybe, most startups, not 9 out of 10 startups fail, right? And one goes to a unicorn. I would say most of the token things like are going to fail because the technology is too early, but you do start to see some infrastructure being built over years by responsible parties. But you just see crashes after that.
Okay. Before we segue into what got built, what is really interesting, what's the bridge in between, let's say, the material world that we perceive as reality. So we won't dive into any DMT rabbit holes here, at least not in this podcast. It's like, okay, so we have a Cambrian
psychedelic podcast.
Exactly. Just separate rabbit hole. Is like, okay, can you pick some examples of the big fails? Like maybe there were good names involved, and you mentioned just like EOS just raised like $4 billion in the token sale throughout 1 year. And then you also said, which may be not so familiar to all listeners, that when you take a bet on startups, you need to be aware as an investor that the average failure quota of startups is around about 90%, So when you put money somewhere into a highly speculative market, be aware that you may lose it all, unless you can take 10 different bets and then you hope that like one of the bets makes it. So can you sketch some of the big failures, or maybe also some things that got really haywire, just that we kind of cover that piece in the podcast? Because how I sense the market of Bitcoin, and I would say at least after 3, if not 4 big bubbles bursting, I would say kind of 98% of it failed. Some say 95, some say 99. I don't mind, right? But like most of it failed, and really billions of dollars of investment into the market failed. So let's stay first on the failure side. Let's get really critical, both of us, to then segue into those that you find really promising, that are building stuff, code, applications on chain that really solve real world issues.
Yeah. I mean, I would say that I'm kind of like trying to figure out which ones are the ones that failed. Like I have t-shirts that have a bunch of like failed startups on them, kind of thing, because they were the ones that were around. I'm trying to think of like, well, so EOS from a chain perspective, I absolutely failed. The way that they did the token sale wasn't necessarily around like they had this vision of like, hey, we're going to raise all this money and we're going to deploy it through venture into people that want to build on top of our chain. I would say through a number of regulatory requirements where they weren't allowed to do US people. That plus, I would say that they just decided to not deploy the money and keep the money in Bitcoin, basically. And so like the EOS chain definitely failed. I think there's still probably building some people building on some of those things. But the EOS chain failed to get traction more than the EVM side of things. Poet, I think, was one that I had on a t-shirt with like tons of like raised a bunch of money. There was a lot of like, oh, we're going to track cannabis on the blockchain. I don't remember all the names of them. Um, there was also a lot of scams just in general. BitConnect, for example, where you have people saying, hey, I'm going to buy into this thing, get your friends to buy in it, you get a piece of their money. And it was basically just a giant Ponzi pyramid scheme, right? Where they were taking the money and they went to jail and zero. And uh, and generally, like the majority of the people that were doing the fundraising weren't scamming people. They generally wanted to build something and they weren't able to execute. Executing is really hard. Some of the successes, were because we were so early, people were trying to do applications that just weren't ready. Like people were trying to do real estate applications on the blockchain. They were trying to do all kinds of things where the technology stack wasn't ready and the people weren't ready. But what really won out was, hey, I'm going to build a new innovative L1. I'm going to like layer one. Like I'm going to build my version of Ethereum because Ethereum is really slow and it can't handle all the transactions. And so there were a lot of, but we're going to use the Ethereum virtual machine. We're going to use the Ethereum like language for building applications on top. We're just going to take our own and maybe we'll try to scale it better, or we'll have more transactions per second, or, we'll have better governance, whatever, reason. So Avalanche and Polygon and and then there were ones like Cardano, which Charles Hoskinson was one of the original people that was on the Ethereum team, and he decided to go with a different language and try to build a UTXO model. And so what happens in this Cambrian explosion is you see a lot of people saying, all right, well, I'm going to try to do it. And what won was the infrastructure. We're still building infrastructure, but infrastructure to try to make things faster and more transactions per second, and layers that plug into that. In I forget what the second like I can talk more about like what in the next cycle, like 2021 cycle, but in the 2017-18 cycle, that was really what won, was like how do we uh build L1s. In the next cycle, we started to see DeFi, which is basically like how do we
Before we
reproduce financial things with infrastructure. Yeah.
be,
Um,
before we cover the last two cycles, what I find particularly interesting meeting you, like we kind of met 6-7 years back and then we met again, is like it seems to me, and maybe let's have this as an intermediate conversation before we move into the more mature cycles of blockchain applications, that you just need to have a very long-term strategic lens. Since you act as a professional investor, right? You're interested in the nascent potential. I reckon you also needed to learn some like tough lessons investing yourself and failing, but
yeah.
kind of you're approaching it like an early stage startup investor that from the get go basically says, if I do my best, I get my risk down, but some of my early stage investments will almost inevitably go down the drain, which is kind of a very different framing of how retail investors usually act, right? A retail investor, he has like a couple of $1,000s in the bank account, and then he says, oh, everybody goes into a Bitcoin now because Trump got elected. I also buy Bitcoin. But I mean, you if you really want to invest in Bitcoin in the hype cycle now, well, you should have done so half a year ago or a year ago when the market is like really low. Because if you buy into the bull market, I mean, then the delta you get out of it won't be really that interesting. So I'm curious. Can you share maybe two or three tough lessons that were really painful for you before we then go into the mature, like the more mature cycles of the last couple of years in Web3 and Bitcoin and blockchain overall?
Yeah, yeah. What some of my failures in investing in startups, like in some, so I started my DecentraNet in 2017. I really liked I really liked the tech evangelism. I was doing the decentralized conferences with Brock Pierce and running around the world and evangelizing decentralization. And I really liked leveraging my network to help founders build what they were doing. There was also an early liquidity aspect to this, where if you're launching a token, you invest or you advise in the token. Like startups, usually you have liquidity 5 to 10 years later. With a token, it could be in the same year, and you could make a lot of things. So I started DecentraNet, which basically I took some of my assets, I put them into a company, and I wanted to. I brought in some other professionals that were my friends and that wanted to help with marketing. And my business partner Ted was a former SEC attorney, so he was looking at the legal and regulatory structure and like doing more of the DD. The failures in that cycle for me were actually thinking that the real world applications were going to happen in that cycle. So like I invested and advised Impact PPA was one thing that we invested in and advised, and it was doing they had built a functioning application of basically a solar panel that would you could turn on and a battery that you could buy a purchase power agreement on a smart contract anywhere in the world, right? And it worked. Like they had one in India, on the thing. You could send some tokens to it, it would turn on a light for the thing. But the world just wasn't ready for those types of things. So like that was one that ended up failing. Dispatch was a protocol that was doing data integrity that was layer one, and we invested a decent amount of money into it, and we were advisors. And they just, they raised, and the volatility of the tokens that were coming in and the treasury didn't work out. And so, another one was Good Money, which I was an advisor to and helped. And they were going to do a platform for, doing good with your money instead of a banking thing. And they raised a bunch of money, and they weren't able to execute what they wanted to do. And so the real world applications, to me, is just way too early. And the infrastructure plays were the things that ended up winning because people needed more infrastructure. It was still very, very hard and difficult to use. And that's one of the things that more infrastructure does, is it abstracts away the difficulty of using a early stage technology. And that's what the future cycles do. You get these massive speculation bubbles. People build some infrastructure. It makes it easier for the next group of people to use it. They still have a learning curve in the next. And eventually, just like you do with the internet, like you don't care what the protocols are in the background. You just use the internet, right? You don't care what's going on with your SMTP server. You send an email, right? And you won't care what protocol is in the background. You're just sending units of value for whatever that application ends up being. There's lots of different types of value in the world on a network, and you just know that it's getting to that other place.
Yeah, for me, somewhat, I have the feeling it's high time after somewhat 45 minutes into the podcast to try to circle around the Holy Grail. In as much as I truly believe in long-term cycles, trend macroeconomist, I'm cool waiting for 10, 20 years, up until a very nascent technology has the necessary infrastructure in place to really challenge at least bits and pieces of the status quo and partly replace it with, I think, healthier, more robust, more, how would you say, not stable, I'm searching for a word, resilient infrastructure. Because ultimately, I think at least this is what unites us in this Zoom room together. When we look at fiat-based currency, especially that is like tending to not be collateralized by oil anymore, and now only basically kind of being collateralized by the biggest army on the planet, but also the biggest army on the planet, talking about the US, can't wage war on everybody else but the US. It's just not feasible from a game theoretical point of view. So that system will inevitably crumble. So a lot of people are eager to build like just spaces around that. So let's circle around the holy grail of the more mature phase of the last, let's say, handful of years. What are those prototypes, experiments, companies, applications that give you hope, that bridge the real world with the Web3 space? And I mean not only those that you're personally invested in, but maybe they're still too speculative for you to invest into, but where you really see signs of hope, of necessary infrastructure being in place and applications built on top of it.
Yeah, definitely. So, I mean, there's blockchain is expanding out into a million different areas that thing, and we could do many hours on each one of them and talk about the ins and outs of that type of infrastructure. I'll name a number of categories, right, that I think are useful. So, in the 2021 cycle, we had the kind of the proliferation of the understanding of NFTs, non-fungible tokens. So we talked about fungibility of completely fungible tokens. We then have the ability of having a unique asset represented on chain. And we had a lot of cycle around selling these unique assets, whether they be artists or marketers or communities, and saying, hey, you have a unique asset that represents your piece of this community. And, we're going to do lots of things. And we saw a lot of people, make lots of money, lose lots of money in that kind of hype cycle. So non-fungibility applications include literally anything that we own that's unique. And so whether it be a certification of some degree or class that you've taken, whether it's an ID of some sort, or whether it's proof that you've done something and you have a ticket to a show and you have that non-fungible ticket and no one can ever take that away from you. It's in your wallet. You've seen it. Any those types of things, arts. And so like that's one thing that came into the public awareness in the 2021 cycle that's still here and still building those types of like unique NFT gated, membership gated things online. DeFi, so decentralized finance. So in the fiat tradfi world, we have a lot of financial applications, and most of those financial applications are not accessible to the majority of the population of the world. They do not have access even to treasury bond yield, right? For example, like 5% a year, 4 or 5% a year, whatever the interest rate is. The mass majority of the people of the world would love to just get 5% of their on their money per year in a savings account. And they don't have access to those types of things, let alone complex derivatives or stock markets or all of those things. And with the power of a phone and a wallet, they get access to stocks and bonds and loans against the things, like just the ability to have a low value loan against an asset is revolutionary for much of the under, and you say underbanked, but the non ability to access financial services groups. And so those Lego building blocks of reproducing this financial system in blockchain has taken a long time to make it more simple, more useful, representing real world assets. Like I mentioned, like treasury bonds is one, stable coins is a real world asset. But now literally any stock or bond or piece of real estate is going to be represented, can be represented, and will be represented on a distributed ledger in a tokenized form, because we want to, it's a superior way of transferring value from one place to another with less intermediaries, less costs, and more open egalitarian access to whatever type of system it is. I'm really interested in decentralized artificial intelligence applications. Um, I think that the centralized, closed source AI systems in general, like you have to, like, all the same issues exist. Like you have to trust what this thing is saying. You can't see it. It's a black box. You can't prove the data that's in it. And it fundamentally can lie to you and tell you things about the world. And if that's what everyone's getting their information source, then whoever writes the frames of what it's allowed to say get to decide what's true in the world. And so the same thing kind of for like sovereignty over your money. We need to have sovereignty over our information sources. And so decentralized applications for artificial intelligence are going to be massive, as well as like AI agents in general. So like if you have an agent that's coming that like is going to do tasks for you in the world, it's not going to use a bank account, right? Like it's hard enough for humans to get a bank account, let alone an agent. And the native application is going to be a cryptocurrency wallet.
I would like, Matt,
Decentralized. Good.
um, I think I can follow you, but I'm not too sure all the listeners can follow you. Let's disentangle some of the easier examples of decentralized finance, especially the linkage in between like real world
Okay.
assets and tokenizing them. Because I give you my example, and then you can just like try to weigh that or counterbalance that. Because I know both the very mainstream, we're talking now, the most mainstream banks in the world are trying to figure that out, right? And it has a lot to do with like opening new avenues to actually retail investors. So imagine you want to build, I don't know, like a house, right? Then normally you have to put a collateral down, right? You go to a commercial bank and you take on a very large loan. What is very interesting that in the space now, there are systems already in place where you could interface with your community through an application on a chain and basically say, hey, I want to do this differently. I don't want to go to a commercial bank. I am giving you parts of my overall asset. So in that case, the house or maybe pieces of the land as a collateral. And you're able to source monetary streams beyond fiat into basically building your own house. Can you give a couple of other accessible examples before we kind of segue into a conversation? Why do we both think, and I think we agree, that like decentralized AI is really super important? I just want to disentangle those large rabbit holes.
Sure, sure. Yeah, so the ability for communities to pool resources with an understood structure, kind of smart contracts and governance, like set rules and participation, is massive. And so, like you used one example of like pooling resources for a house. It's also leapfrogs a lot of the like brick and mortar institutions that have been necessary, like that you go in the US, you go to the bank and you do this and stuff. And a lot of places don't really have that brick and mortar infrastructure. And so the ability for new financial organizations that give loans out to communities of people is huge. And so like just like coordinating resources in that sense, DAOs are a term that are used, but it's really just collective ownership of property and the governance around the property represented on chain. Uh, uh, Real world assets, like I mean, everything that we have in the world, whether it's a stock or a bond or a real estate or they're all considered real world assets. And we're building in parallel to a financial system that we don't view as necessarily like transparent and egalitarian and working. And so eventually the superior, just like, information systems in the internet, like eventually all the information systems go on the internet. Eventually all of the things that we want to track ownership of in the world through people go onto a distributed ledger on the worldwide accounting ledger, right? And of those things. And so like uh that's one, like I was going to say decentralized, like physical infrastructure. So DPIN is the terminology there. So the sharing of bandwidth on a network, the sharing uh, of compute resources on your phone. There's the sharing of like data around police stops, the sharing of any sort of like physical infrastructure that we have, and the ability to share that resource with other people is something that is becoming a really big one. And then I'll I'll mention decentralized science. So the ability to have pooled resources to fund scientific experiments, whether it be drug discovery, whether it be other types of shared IP around that, is a very new and interesting application. Um, and the AI thing, we could go on for forever, but fundamentally, like, we're open sourcing the institution of money, right? We're open sourcing the institution of governance around that money, where we can write our own rule sets around how we want to govern our property, and governments can enforce that. We need enforcement of those things, but we're going to come up with new types of governance structures that allow for direct participation of everyone in a network. And uh, yeah, like we kind of, and with the pre-conversation, we talked about like the whole open sourcing of the institution of money kind of thing, which I always kind of like to say, which is like, in the Catholic Church, the Catholic Reformation, we Martin Luther took the Bible, which was in Latin, he translated it into German, and he open sourced Christianity. He like gave it to the people; they could do their own version. And
Let's
Catholic Church still
stay there
exists, but you don't have to use
because
it. Yeah.
because I totally vibe with the metaphor, and I have not heard it before, but I think it's a very smart metaphor. Also, for deepening our relationship, but also, to give the listeners a really powerful metaphor. So when we look at the market at large and we take the metaphor of printing the Bible in German, disseminating it, and then we had whatever. We had the Reformation, then we had the War of 30 Years, and then suddenly there was a certain maturity within
Froze a little bit.
The culture in order to really open source the Bible. So I wonder, when you take the metaphor that you sketched, like, okay, you open source the Bible, like, where do you see the meme, that cultural transformation standing at large? Because quite a bit of the technology is still immature and will still need a couple of years of building like more infrastructure. But bits and pieces of the application layer are ready. So I wonder if we segue into the last piece of the conversation of today's podcast. Why is that so exciting for you? And I mean for you as a person, but also for you as an investor, but also for you being a political human being, right? Like, what makes all of this so exciting? Where do you see it standing? And when you look into a crystal ball, what do you think can happen maybe over the next 2, 3, 4 years? And then take a like a Horizon 3 approach. Like, what could happen in the next 10 years? Like, to really fulfill the original promises of blockchain.
Yeah, for sure. And it cut out a little bit on the open sourcing of the institution part. I think I got the majority of it, but the yeah, what was that analogy in general for me was when I kind of like heard it and came up with it and kind of gave a keynote, was because we're open sourcing an institution. the Catholic Church was a main body of an institution that controlled a lot of the politics and governance and power in the world. And so when you were able to open source and fork and have people create their own versions of that institution, it was a very powerful moment. And they had the printing press, which was the technological part of that moment, where they could mass produce whatever version that they wanted to do. And so blockchain in general is the open sourcing of the institution of money. We now have open source software that anyone can deploy, create their own version of money with their own values and their own community. And there isn't anything anyone can do to in reality, to stop that open sourcing and Cambrian explosion of rule sets around value transfer. And so and then I believe that the same thing is happening kind of with governance as an institution. Like, nation state structures are very old in terms of like a couple hundred years old. And so I believe that we will find more participatory governance structures for every person to be heard or be able to delegate their vote or their participation to someone that they trust. So liquid democracy types of models, and we're seeing that. So I what was
let's
my view for the next years kind of thing?
no, before we dive deeper into the crystal ball, what makes me curious is I love macroeconomic rabbit holes. It's really one of my favorite rabbit holes. So I'm asking myself, okay, if I'm one of the biggest landholders of planet, so I have position on title on an insane amount of land. I'm the Vatican, right? But I don't have an own currency. I mean, why would not the Catholic Church issue their own currency? Nobody can prevent it. People, for whatever reason, still like Catholicism, and when the Pope travels around, he fills stadiums. So that would be one example. Let's get a little bit speculative. Another one is the British crown. We still have the British pound, but when you look at the exchange rate of the British pound, the pound was way stronger before. Besides the Vatican, who owns most land on the planet with position on title? Still the British Crown. Again here, why would not the British Crown, issue just a new currency? Let's just say the new pound or the real pound or the Vatican or, so I'm really curious, why are the institutions that are obviously like having a hard thing not crumbling, right? Let's say just central banks, they amass trillions of dollars. Nobody ever can pay back the debts. It's like abundantly clear. It's like primary school math, right? It's like the US is broke. That's it, right? But also Great Britain is also broke. Like a lot of the advanced economies on the planet are broke. They will never be able to pay back their debts. So what is now interesting is the mainstream institutions, all the big names of the mainstream institutions, they're kind of going into Bitcoin. But when you look at the numbers at large, a couple of trillion, well, with a couple of trillion, you can't collateralize an advanced economy, right? At least not the size of Germany or Great Britain or Japan or the United States or stuff like that. So I'm just wondering, this is now very, very speculative, but why don't you see like larger bodies, institutions, nation states, or to stay with the example of the Vatican, why are they not getting more creative with Web3 at large?
Yeah, totally. It's a good thought experiment, good Gedanken experiment kind of thing, right? Um, so one, institutions are very slow moving. They don't adapt to new innovations and technologies. They see a lot of risk involved in those types of things, and so I would imagine that like even creating like digital dollars, like it didn't come from the government. It came from Tether. It came from Circle, right? And with a lot of fight, like a lot of people thought Tether was a scam and this, and some people still do, and they're still now they're having more profits than JP Morgan, right? And so they're very, very slow moving. They don't take a lot of risk. I do fundamentally see institutions creating their own digital currencies. I'm hoping it's not like the central bank digital currencies. Like they will represent the dollar in a digital currency. I think the euro, like things like that. The China like has their plans for this, and so there's a lot of control that can happen if you're not allowed to have the freedom to choose which currency. And so, like to complete the metaphor of before, like the Catholic Church still exists, you just don't have to use that, right? And so central banks will still exist, and if anything, this forces them to change their monetary policy potentially to adapt to have more people. Like also geographically based currencies, in my opinion, don't make any sense if you have no borders on your money, right? If you have the internet of money and you have like currencies, why do you have a geographically based currency? Why does it matter where the geography if there's the ability to do it, unless you're forcing everyone to use that currency, right? And that's the fiat. The fiat is by decree, right? I do think that the Vatican has a bank. They have all of those types of things. I totally could see them launching, Christian coin eventually. And I'm not Christian. I was raised Catholic, but like I don't really identify. I don't go to church, so it wouldn't
But
be
let's
something
stay
I'm
with the thought
interested in.
experiment. So I was born
Yeah, yeah,
Christian,
yeah.
and in
Um,
Germany, so
sure.
in Germany, I mean, as a baby, I got baptized. I had to be in the Catholic Church, and then when I was 18, I went into an office which was kind of hard to find and get an appointment. And you go in there, and you literally have to physically show up there. At least in Germany, because in Germany you pay then you really pay a tax for the Catholic Church. I said I don't want to fund that institution. So I go in there and say, "Hi, I'm Alistair. I want to opt out of the Catholic Church." They're asking you all sorts of questions, but it takes kind of 5 minutes and then you're out of the church. So from an investor standpoint, I don't know if I would not invest into a Vatican coin if it's well constructed and collateralized by a lot of the land holdings as kind of a reserve currency. This is why I think this thought experiment is really so interesting. So anyhow, let's towards the end of the podcast. If the world moves at least partly in a direction that you wish it is going to, what do you see happening in the next, let's say, 4-year cycle, especially with Trump taking precedence in the United States? And most likely, this will be way more beneficial to the blockchain universe at large. And then maybe lastly, what do you sense could happening, in the realm of network states, semi-autonomous regions, and stuff like that in the next 10 years, so that we end up with a visionary, positive outlook today?
Yeah, absolutely. So in this cycle, I see this as like a super cycle. It's the first truly institutional Bitcoin cryptocurrency cycle. We have the ETFs, which allow for participation of, all the major institutions in the world. We have the very transparent kind of problems, like you mentioned, like the debt can never be paid back. There's trillions of dollars being borrowed all these times, and there's the public awareness of that that's never like never before. You have the richest man in the world that owns X, Elon Musk tweeting about how the government's bankrupt, and if we don't stop something, thing. So like that zeitgeist, like we have that in the public sphere, and so we have then the momentum to create meaningful change in our institutions, if we're successful. In terms of like, I do fundamentally see if the U.S. moves to a strategic Bitcoin reserve, which they have mentioned doing, and they have proposals, that catalyzes the rest of the world to do something similar. And we can see an actual reformation of the monetary, like the debt-based monetary system, into something that bases it on something that no one can print infinite amounts of and give it to their friends. Bitcoin in general, like one of the things that like I mentioned before was like I wrote an article in 2018 called Satoshi's Second Gift, which was about the energy, the benefits of having Bitcoin mining basically incentivize the construction of renewable energy infrastructure around the world. I see this being kind of an economic model for a lot of people creating energy infrastructure around the world, and that's happening all over the world. So any type of stranded energy, solar, wind, running water, things like that, that's a really meaningful thing. And so if Bitcoin becomes a reverse curve currency, kind of a flippening, right? You talked about the petrodollar, kind of like, hey, use my token for oil or we're going to invade you kind of thing, right? The proof of violence, right, is the consensus mechanism. And we move to something that's a voluntary kind of standard and in those institutions. There's a million other protocols. There's a million other applications of decentralized networks, real world assets, things like that. I see if the US moves in this direction, they will, once again be kind of like, there's a lot of small, like Singapore, there's a couple of smaller nations that were like being hubs, but a lot of it will move back to the United States. There's a lot of capital there, and a lot of innovation will come from that. I see it meaningfully affecting our governance structures of the world because we can track everything that the government does and hold them accountable. Like they can't go back and erase. You can't cook books. Like all government records should be on chain, right? So we can go back and audit them at any time, right? And all institutions that we hold accountable to the world, we must put them on chain so there can be no corruption of the records. Period. End of story. It doesn't have to be all public, like you don't have to see everything at all times, but the auditors need to be able to review the information. Participatory governance, right? Like if you had an identity on chain and you were able to do a vote, or you were able to delegate your vote to an expert that you view thing, you can have really big shifts in everyone being able to participate in the governance of the resources and change those shapes. And then I would say the artificial intelligence side of it is like something I'm not an expert in, but like I've over the past year I've participated in like Morpheus and some of the like open source AI stuff, and so like the ability for AI to go do really complex things for us all over the world, including crypto things. Like if you can natural language, type in what you wanted to go do and it does the complicated crypto things for you, that makes the next couple billion people to be able to go out and do those things much, much, much easier. Just like PageRank and Google made it really easy to search the internet, we now have AI that can make complex technical things really done for us. And so I see it as a renaissance. I see it as like us being able to really reform our institutions through this auditable transformational technology, and like money governance, and it ties well with the AI side of it because you need to be like blockchain and smart contracts are regulatory technology. Like they regulate whatever it is. It's cryptography is regulatory, and so I see the AI being regulated on chain with what it is allowed to look at and what it is allowed to, what information, and we need to use regulatory technologies because it can't do what it can't do what it doesn't say or what information we don't give it in that sense. And so I'm very I'm always an optimist person in general, but I'm very optimistic at this moment for the benefit of humanity as we go through this shift.
Yeah, I can only second that. I'm also optimistic because most of the technology you can simply not shut down and fully centralize, right? And that in itself is really very metaphorically like tied to this, like once you open source the Bible and you have a printing press, there's no going back, right? And this also leaves me optimistic. I think what for me excites me most is I really have the feeling that a lot of the people that don't have access to like the underbanked or not banked people on the planet, especially those that need to take on like loans, ultimately there will be community around those people, from small farmers, that instead, to go to a credit shark, can collateralize their mutual basket of commodities, be it coffee, be it cacao, so that they can really build like communities of lending for each other. That's definitely one thing. The other thing is to really have a unique, like I don't know what's double unique, like a unique digital identity. I think that will become like so important, because with all of the deep fake going on, it's really just important. Well, who is Alistair if I can deep fake Alistair better than even my parents know that I'm a deep fake? So this like true identity is an important thing. And then maybe lastly is I truly see the advent of a third attractor beyond the nation state, which will build semi-autonomous communities of resilience, change makers uniting, very decentralized, that unite under a banner of common values. And I don't think it will only go the libertarian way. Although I also, I have quite a stack of libertarian values in my overall like value stack. So like this whole network state thing is definitely interesting to see where that goes in the next couple of years. Matt,
Yeah, the network
final.
state is wild. The wild like concept of building your own network and your own and getting
Definitely,
recognition from other states, right?
I'm that's definitely one of the things that excites me most. Like in my 50s, I still think it will take like a full, like you say, a full super cycle of the next 4 years. But I see network states happening already, and this will become
Yeah.
way more mature. Maybe finally, if people want to interface with you, get in contact with you, what are the best sources, show notes, links, Twitter handles, email, and maybe finally, what's the most interesting thing for you? People get in contact with you. Yeah. Like just, yeah.
Totally. Yeah. So, I'm DecentraNet's my early stage investment advisory. Like we like blockchain and impact and longevity and psychedelic medicines. And so we're looking for projects, to work on and advise. And Matt at DecentraNet.com. I'm a GP into fund of funds. So if people are interested in getting broad-based exposure to the digital asset ecosystem, investor types, Hyla funds, and Amphibian. Matt, I think it's Matt _ McKibbin on X is great. Please do follow me there. I've been like getting more into the X thing, as well as LinkedIn. I'm on LinkedIn. Just looking forward to like being that kind of like change maker and catalyzer for this. I've been in their space for a while, and so looking at participating in a lot of these this revolution as much as I possibly can.
Thanks so much, Matt. This was a great conversation, and I hope
Thank
we
you.
could, shed some light into the various rabbit holes around, Web3 and blockchain. Thanks for the conversation.